In today's episode, Paul and I will discuss why infinite banking is the best way to create and control your personal opportunity fund. Now, what is an opportunity fund? It could be something different for everybody, but Paul and I will discuss what that means to us personally and some examples of what it's meant to our clients. So, and then last but not least, we'll discuss why the death benefit is a phenomenal opportunity fund for the next generation. Hope you enjoy. Hey, I'm Dave,
And I'm Paul.
and this is the Wealth Warehouse Podcast. Hey, we just hit record right in the middle of Paul saying something funny. So, what's up, Paul?
Hey, yeah, not much, man. How you doing?
Yeah, I'm good. I'm good. Getting ready to see you in the next week. Heading to
Yes.
South Dakota.
Speaking of the dogs, the lovely dogs, I just spent $1,300 at the veterinarian on two dogs. Anyway,
Ooh.
little side note.
Is that more than you paid for him in the first place?
Actually, yeah. I think
Yeah,
Remy was $800 in 2008 when we bought him, and then Buddy was like $720, I think.
really.
So, yeah,
Yep,
almost.
that's like having another kid, man. I mean, that's not true because kids are ridiculously expensive,
They are.
you know?
Yeah, they
Yeah.
are.
I like those. I get all these memes for some reason uh, that show pictures of like, a man and a woman standing in front of a giant pile of cash, like what our lives would be like if we didn't have kids. Yeah.
Yeah,
But
but
I'd be so unfulfilled in other areas. Money's not everything.
that's right. Certainly not.
Yeah. I'll make up for it when they're on their own and I can really start putting money away. So, but that'll be they say it goes by in a flash, like blink your eyes, they're all grown up. I still don't believe it, but I'm sure when they are grown up, then I'll say that.
Well, we're getting close. I mean, it's when we move to Tennessee, Carmela will, you know, be in her last year of middle school. She'll be in eighth grade, and she'll enter high school. So it's like, whoa. And then you've got high school age kids.
Yeah, we'll be kicking one out the door next summer.
Yeah, is he going to be driving away in that Audi or what?
No, my that's Jack. He's got 2 years left, but William will be driving away in a Hyundai. So yeah, Jack's gonna be looking at an Audi probably tomorrow.
It's it
You know,
looks it looks nice. Trading
yeah,
up
got this.
from
He got
his Subaru.
yeah, yeah, his Impreza. But he got if we got the sign off from Paul that the Audi looks good on paper at least, that's a confidence builder. So I'll be sure to check what you told me to check on it.
Yeah, check those control arm bushings,
Yeah,
the
and the
uppers
rotary
especially.
girder.
Yeah, and the
Yeah,
yeah, that's right.
yeah. All right. Well, let's talk, man. Let's talk about um, one of my favorite things about IBC is it's our opportunity fund. Well, what does Nelson say? When you have capital, opportunity finds you. And we talked about that many, many times. So that's a repeating topic on this podcast. But I want to talk to, it's more basic, like a basic level, but maybe the person out there who's listening who maybe they don't have a policy yet. Maybe they haven't started their IBC journey, but they're getting educated and they're trying to, get their feet wet and what is this? And what's an opportunity fund? So, to you, what's an opportunity fund, Paul?
Well, you know, my system of policies is like my Swiss Army knife, my financial Swiss Army knife, because it does so many things. It can perform so many different jobs for me. So in this case, my opportunity fund. So I think most people, and I used to be like this, most people are going to think, well, it's an investment opportunity, and it very well could be, right?
Hmm.
Like you brought me an opportunity a couple weeks ago. It's a very good opportunity. I'm just not in a position right now because of what's going on in our personal life in building a home and building a pool and moving and ending two careers that I want to part ways with, some cash right now. And that's perfectly fine. There'll be other opportunities down the road that are
Yep.
probably just as good. So Um, but as we get into practicing the infinite banking concept, there's other opportunities to do things that maybe aren't just strictly investment based. It's not a real estate transaction. It's not a private money loan or something. It's something else. It could be, financing a car. It could be financing a down payment for something. In my case, like a construction loan. It could be earmarking cash for some future need that is coming up, some future expense, right? So I want to meet my own needs this time and practice IBC by allocating those funds to that future expense. In this case, my pool. And for those of you who have built an in-ground pool in the last few years, you know what I'm talking about. It is not cheap. And I'll tell you, the contract price for my pool was $123,000. That's just the pool and the filter and the lighting and, whatever. Then you have to do, surround it with, porcelain tile or whatever. Some people, rich people would put travertine or whatever. Landscaping, fencing, all those other things. And that's an additional cost, right?
Wow.
So, it's not cheap. But again, when you put capital where you can get at it, 0% of that pool will be financed with a thrift savings plan loan. 0. It's going to be financed with policy loans.
And 0% of that will be paid with your cash, which you would then never have again to earn interest on. It's paid with the life insurance company's cash.
Yes, I enjoy the uninterrupted compounding and growth of my 7 dividend-paying whole life policies. Maybe it'll be 8 or 9 by then. I don't know, but
yeah,
yep. So that's what it means to me. It's not necessarily investment opportunity. It could be just some other opportunity that is a necessity. Like we must have this pool.
Right. I mean, there's all kinds of opportunities. If somebody offered me Super Bowl tickets, that's an opportunity. And that's probably cash I don't have just laying around. I'll go to the policy for it.
Right.
But family vacations, things like that. And what's coming up, here right around the corner for a lot of business owners are taxes. And, one of those things that's unknown, you can try to plan for it, but man, until the CPA cranks those numbers and shows you that bill, you don't really know how much you're going to owe. I was talking to 2 people recently. One, we have a shared client who told us his story about getting hit with the tax bill and, got defrauded out of some money and this and that. And he and his wife were so happy that they had these policies to lean on instead of having all their money wrapped up in a 401k in which they'd have to go get, apply for a loan or pay penalties to withdraw that money and all of that. So I like the quote from Dan Sullivan. I think it was from his book, 10X is easier than 10X, that if you have the money to solve a problem, you don't have a problem.
Right. Like did you just say 10X is easier than 10X?
No, 2X. 10X is easier than 2X. Maybe it sounded the same. Yeah. Thanks for correcting me if I did.
You don't have any problems if you, You've said that before in the podcast, and it's a great quote. And folks, the sequence, again, this goes back to sequencing of your dollars. This is a Swiss Army knife product. I don't need a separate fund for this and a separate fund for that. That's little Billy's college fund, and that's Sarah's Sweet 16 car fund, or whatever. You don't need that. There's one place, one system that you need, and it's this system. And I was explaining that to my boss today of, some debt repayment strategies. And I was like, the only thing that, if I could do Dave Ramsey's debt snowball, it would be better. I can't believe I said it like that. It would be better if we put a whole life insurance policy in between what we're going to do and paying off the debt. And once I explained like how it works, once the money's, given to the life insurance company as premium, it's now money that is chugging along for you forever. Otherwise, if we don't sequence it through a policy or a system of policies, that money's gone forever.
Yeah, exactly. And if you want to learn more about that, I think it's one of our most listened to episodes, using IBC to eliminate debt. Pretty early. Yeah. So scroll all the way to the bottom and you'll find it.
Maybe or something.
16, 18, somewhere around there in the teens. But it's sequencing your money, the sequence of capital. That's another episode we did. That one little change, put IBC in between. put your whole life,
That's right.
specially design whole life insurance policy right in between of where your money comes in to where it leaves your hands.
And if Dave or I design your policy, it's extra special,
Yeah, of course.
extra
So
specially designed.
not SDL, SDLIC, it's ESDLIC, extra special.
Right.
There you go. So I mean, I might call reserving that cash, having access to capital for taxes like an emergency fund, which is also part of my policy design,
Sure.
And how do we determine what's the opportunity fund? Because if you're putting all the money in there
Sure.
and you just talked about different places you can put money into college funds, you can put it into retirement accounts, you can put it into savings accounts for short-term things or a future wedding, all of that. If you all put it into the same pool, it's all in there.
Yep.
So to determine how much of that pool of capital is opportunity fund, all you got to do is subtract what you want for every other area. How much of that is for emergency? How much of that is for college savings? How much is for, saving up for the next car? Okay. Calculate that number. Anything above that, that's your opportunity fund. That's
Right.
money that could be working in two places at the exact same time, earning you more money. That's how I would define it.
Yeah, there's several different ways to look at it. We learned, in 2020, 2021, where the government shut down in many states and across the world, where economies were shut down and people could not go to work, even though they wanted to. Right?
Even though you have the basic God-given right to
You have
work,
the God-given right. That's right.
and they said no, we're taking that right away. Yeah.
Of course they did. So if it's 3 months of household funds, if it's 6 months, a year, maybe it's a year now. Given the history of what just happened, maybe you need a year. I don't know. I personally, this is just what I do. I like to have at least a year's worth of my base premium held as my reserve for the following
Okay.
year.
That makes sense.
Does that make sense?
Yeah, that I haven't thought of it like that. So
Mm-hmm.
having at least enough in there to keep your policies going.
Correct.
Okay.
Yep. And then anything above that, great. But I try to make my zero, I guess my zero line really 1 year's worth of base premium
Okay. And you could do the same
plus
if
the
it was
PUA rider cost, which is $120 on each policy. It's nothing.
Okay.
So
the minimum required payment.
correct.
Yeah. So if you factor that into your annual allotment, like here's what I need for 6 months of expenses, and take your annual base payments you're making over all your policies, cut that in half. That's 6 months worth of base premium. That just goes on top of whatever other expenses I have over a 6 month time frame, and that equals my emergency account.
Yeah.
So that's another good way to do it. Because you do need to factor in, what expenses do you only pay once a year? Well, that should be part of your 6 month expense emergency account as well.
Right.
So yeah, there's such peace of mind, man, with having an emergency account. I mean, I don't like having to dip into it for an emergency, because that just means I can't handle what's going on right now with my regular cash flow.
Right. Something's wrong.
But it's there. And at
It's
least
there.
I don't lose sleep at night. I just take the loan and hey, I'll pay it back when I can. Big deal.
Yeah, and
What it's for.
I've encountered, recently in discussions with new prospective clients and people that have become clients, where I always ask this question. So if you go through my the process with me or with Dave, but I always ask this question is like, okay, you've shown me your financials here. What other monies are there that you're not telling me about? And it's okay. And if you don't want to tell me about, that's fine. But the more we know, the more we can help. But oftentimes there's like, well, this is my emergency fund over here in this like savings
Yeah,
account.
right.
I
Yeah.
even hide this from the other spouse because
Yeah.
she'll just spend it or he'll just spend it on whatever.
Mm-hmm.
And I'm like, okay, that's fine. But let's see what it will do over here for you. Hey, this is
Yeah.
going to purchase you a tremendous amount of death benefit. It's not going to be taxed anymore. It's going to be private. Maybe
Yeah, there you go.
you do the finances, so maybe she, doesn't know any of the login. I don't know, or I don't want to do that to people, but still, it should be in your bank, in your banking system, not
Yeah.
in the commercial bank, right?
Yeah.
So remember that, folks. When you're going through the process, your emergency like still going to be liquid. Well, there's a way for us to keep it almost 100% liquid, so you lose almost no liquidity by moving it over into your policy or policies. So
There you
just
go.
ask that question when the time comes.
Yeah. And if you're afraid, if you got a little stockpile going that maybe your more, spending heavy spouse knows about, but you keep it away from them for their own protection, and for the sake of your marriage, then you could put it in the policy. Even if the other spouse wants to try to secretly take a loan, you're going to know about it. And it's going to take a
Right.
couple days to get to you. You're going to get email saying you took a loan. It's going to show up in the bank account. So it's not like right there ready to spend immediately. Right. So it's friction in between you and
Friction.
your money.
Yeah, I like how you put
Yeah.
that. There's, you know, we could have used some friction last year.
We could have with some money that we had just sitting in an account because we didn't have any room in the policies.
Yep.
So yeah, but it's a
Pause.
good thing. I used to view it as a kind of a bad thing, but pretty much anything you can reframe it and make it a good thing. And in this case, I was able to reframe that after thinking about it like friction because of my own experience, not having any friction between me and my money turned into a bad decision.
Right.
So it's actually a good thing. And I like to tell people that it's actually a good thing and that it takes you a couple days to access that cash value.
Yes. And there's a few companies, not really the ones we work with necessarily, but some other mutual life insurance companies out there that the policy loan process is still a piece of paper that you have to print out, fill out, wet sign, and then, scan it in.
Or you have to
And
call in on the phone and
or you have to call in on the
sit through,
phone.
wait and talk to somebody. Yeah.
Yeah, or if you maybe jointly own a policy, you might have to do the same type of thing.
Yeah.
But again, all of that is friction. It's a minor inconvenience, considering the terms of the loan are the best you're ever going to find in the history of
Yep.
mankind and finance. The life insurance, the whole life insurance policy loan feature is the best loan yet you'll ever take.
Yeah. Exactly. So what's another opportunity? One opportunity that really comes to mind for me is changing careers and starting businesses or doing both at the same time, which I've done multiple times, change careers like 180 out, one career that has nothing to do with the next,
Right.
until I finally landed on something that fits.
Finally
That's
found something he was good at.
finally, man, it took a long time, it was a natural fit. So, but having that access to capital helps. We've got another shared client who's
Hmm.
got a friend who has a Lego resale business.
Legos.
Like Legos, like the ones your
Right.
little kids leave all over the
I still
house and you
have my
step on.
Legos. Anthony played with them.
Really? Yeah,
Yeah, so now we
I've
just
got
added to
boxes
that
of them.
collection. And
Yeah,
some other grandchild will play with those someday.
yeah. Well, this guy will actually go out and buy those Lego sets and then
Yeah,
sit on them for a year, maybe a year and a half. And then, when they're all out of they don't manufacture that set anymore, he'll bring it out to the public and send it to the highest bidder. And he's got a system down. He's making money and he's got a history, a track record of doing it. The only thing keeping him from going bigger is more capital. So our
right.
client is talking to him about, hey, maybe bringing in some capital to, get a bigger warehouse so you can store more Legos and buy more Legos. Like pretty cool opportunity. I mean, you can really, I remember listening to Gary Vee years ago, and he's like, man, just focus on what you really like because there's probably a way to make money doing it. And one example he used was people who collected Pokemon cards,
Oh gosh.
which to me is like the dumbest thing in the world. But there's people who trade Pokemon cards and make a living doing it.
Right.
Crazy.
Yeah, grown people.
Grown, if you could call them that. They're
Yeah,
physically grown. Yeah.
physically grown.
Yeah.
Beyond the
So
age of consent.
yeah.
And still living in their parents' basement, maybe. But
But I
hey,
mean, anything could be an opportunity. Another one is, wait till the market. If you like to play in the market, great. But what this allows you to do is just stock your capital and have it at the ready when the market takes a dump because it's going to. And then it's going to go back up. So
right.
get in there, grab what you can and and let it go back up and sell if you want, make money.
Yep. Yeah, do what you're good at.
That would be another good episode. Focus on what you're good at. I'm a firm believer in that, man.
Yeah. Do what you're good at. And it may not it may not be your following your passion necessarily, but you should do what you're good at so that someday you can follow your passion. But the two right out of the gate, right out of college may not align. I heard somebody say that the other day and I was like, "Yeah, that makes sense."
Yeah.
I'm not saying it can't, but
There needs to be a mandatory course taught to high school kids that, because what do school counselors do? They say, well, here's the markets, the degrees that are making the most money. This is what you should do.
Right.
Like, man, how about here's what you should focus on. Figure out what you're good at. I think that's what school is terrible at doing, is helping us figure out what we're really good at and encouraging it.
Yeah, the curriculum is interesting. But I'm looking at what my kids in elementary school or middle school now, I guess, are doing, and I minored in English in college, right, and I majored in history, and aside from writing professionally and communicating professionally with people, I don't really use those skills much.
I mean, communication is highly underrated, and being able to write a complete sentence with no grammatical errors is actually more
Yeah,
rare than
it's rare, but
than
now
you
all these people that
than you
can lean
think.
on Grammarly and all this other crap, and
Well, and AI, I know. My kids let AI do their homework now.
I
It's
don't
a,
I don't like I don't like it. Anyway, going
it's
off on a
crazy.
tangent here.
Yeah, we are. But anyway, what we were getting at, actually, before we exit that tangent, I want to promote a podcast or a book I read called "The Six Working Geniuses" by Patrick Lencioni, who
Oh,
wrote
Lencioni.
the five dysfunctions of a team. I thought it was Lencioni, and then on his podcast he calls himself Lencioni. It's Patrick
Lencioni.
Lencioni. Yeah, but the six working geniuses will help you define what energizes you when it comes to work. So there's a couple things that energize all of us that we're really good at naturally, and it gives us energy. There's a couple that we can do and do for a while without being drained, but we're not the best at it. And then there's a couple things we should absolutely avoid because we're terrible and it's going to drain all of our energy. So if you want to learn a little bit more about
Cool.
yourself, check that book out. And I think he even has like a profile test to figure out which ones are yours. So I thought that it was a really cool book.
Yeah, so if you guys are looking to pick me up and Dave up a little bit, get on our calendar and say, "I get it. I read the book and I get it." That's what gets me excited.
Oh yeah. Yeah. Those are the
It's
best
like
conversations we have, man.
just just brilliant. It's like, "Yes.
Yeah. Somebody who gets it. Perfect. Let's go.
It's so rare."
Yeah. But I'd say it's a lot more common with our podcast leads than anywhere else. Cause most people who are listening right now are going to go read the book that we tell you to read every time, Becoming Your Own Banker by Nelson Nash,
Yep.
and then schedule time with us. So, or check out the website, thewealthwarehousepodcast.com.
That's right.
There you go.
Exactly that.
Now let's talk about, we talked about that access to capital for opportunities and how that's such a great part of infinite banking and one of our favorite aspects about it. But let's not forget about what makes it all happen. What makes it all work is the death benefit.
No question. You can't buy a life insurance without it.
You can't buy life insurance without it, and it's the only thing that's going to matter when you kick the bucket to your family. It's the only thing they're going to care
Although,
about.
I suppose you could buy universal life and dwindle down the death benefit and reduce it to almost nothing. Yeah, anyway, so
If you want to. Yeah, if you don't
if you
like
want to.
guarantees, if you want to take more risk, cool.
Yeah,
But
weird.
so there's a lot of things that talk about creating opportunities for the next generation. I mean, imagine my parents are still alive, thank God. My grandparents, I've got one left.
Me too.
Imagine if all your grandparents, every grandparent who passed, left a giant tax-free death benefit to your parents. I
Right.
wouldn't have to worry about my mom a day in my life financially, which I don't now. She's done a great job taking care of herself. But how cool would that be? Maybe they could do whatever. They could come visit more often. They could take the kids on vacations
Yeah.
more often, the
Yep.
grandkids and all that kind of stuff.
You know,
Like, that's cool.
It's a shame that this knowledge like skipped a couple of generations somehow, where people did not. People used again. We've talked about it on the podcast, but people used to buy life insurance. That's where they used to save money.
Yeah.
Was in a life insurance policy. I mean, It's a Wonderful Life with Jimmy Stewart, one of my favorite movies. I watch it every Christmas. He had a $15,000
I've
policy
got
with
$15,000 here.
$500 of cash in it or something, for cash
And
value, or
that was
whatever.
legit. That's a legit asset that he wanted to collateralize. And people, I bet 95% of people watching that today are like, what in the world is he talking about?
Right.
You
So
know,
it's
nobody
it's
knows.
they don't know. It's very it's very interesting. Looking back when I watched that as a kid. Now I see it today. I'm like, I pointed out to my children, I'm like, see.
Uh, yeah. Yeah.
But guys like J.C. Penney, Walt Disney, the Rockefeller family, and the list goes on of people who saw opportunity and had life insurance cash value that they could get at
Yep.
to finance, the illustration business for Disney, or the opening stores for JC, whatever it was. So yeah, and the tax-free wealth transfer, it would change the dynamic of every family.
Yeah.
I want to say mostly for the better, right? Because without education, money is nothing. We know people that couldn't inherit $1 million. It'll be gone next year. Be gone.
Well, in which case, as an agent, our recommendation would be we'll set it up as an annuity then to be paid out a certain amount every year for the rest
Yep.
of their lives.
Yep.
Or for a certain number of years.
Right. And I know that's some people's concerns. Like, I don't want to spoil the next generation or whatever. I was like, well, if you look at the likelihood when you die, you might die in your 80s or 90s. Your children are going to be old people too.
Yeah, if they're
they
not
haven't
squared
figured
away
it out
by then, yeah.
you're going to know.
Yeah, exactly.
Well before that, right? So, but there's no better way to transfer family wealth than through, and this is not a trust discussion, but the use of whole life insurance. There's no better
Yeah.
way.
Right. When
Not,
you walk out, cash walks in.
yep. Not real estate, not businesses, right? Those aren't liquid things. They might provide some cash flow or whatever, but the kid may not want to run the business. They might not want to run, own real estate, whatever it is. And those things are fine. That's where we put our money. You and I, we put our money in businesses and real estate. Sometimes they're the same thing. But those are not liquid things.
Yeah.
So
Right.
this is where life insurance comes in. It's simple.
Yep.
The life insurance is going to send a check to who they're told to send the check to.
Yeah.
Beneficiary.
And what can that death benefit be used for by that family? Not, it could be, here's a really great example is everybody needs time, right? You got time to accomplish things. If you want to send your kids to college or give them money for a down payment or get started in life, you're counting on having enough time to be able to accumulate enough income and capital to do that for them. Well, there's nothing guaranteeing that time. Everybody, it's sad to say, we don't like to talk about it, but today could be your last day. There's nothing
Yep.
guaranteeing that. But what could guarantee that even if you ran out of time before you accomplish that, it'll still happen. Your kids' education will still be funded. The house will still get paid off. Your spouse will still live comfortably for the rest of his or her life. Your kids will have a down payment for their home. The only thing that can guarantee that is life insurance.
Yep. If you need time, you need life insurance.
Fact.
Facts.
Facts. So Hannah had a high school friend. I want to say, yeah, a high school friend who lost his dad, like in high school, but he was left a whole lot of money from a life insurance policy. So this kid, after high school, got to travel the world, ended up moving to Mexico, opening a restaurant, I think in Tulum, and like runs a bar down there and kind of hangs out on the beach, runs a bar and grill, and just lives the life, man. And he never would have had that opportunity had his dad not had the foresight to put life insurance in place on himself.
Right. Yeah. If you've got people depending on you, it's a no-brainer. And again, if it's not whole life, it better be term.
Convertible.
Convertible term.
Yep.
Excuse me. Yep. Convertible term.
Yeah. And then finally, a peace of mind that no matter what happens let's talk about getting policies on kids. because a lot of
Yeah.
people are like, why in the world would you get a life insurance policy on a child? Well, how about this case in point? We've got a client who got policies on both of his kids. 6 months later, his son was diagnosed with type 1 diabetes.
Yep. Insulin
Uh,
dependent diabetes. Yep.
could be uninsurable now when he becomes an
Right.
adult. Could be uninsurable. Maybe he could get insurance, maybe not. But at least now he's guaranteed to have death benefit, and that death benefit is going to grow every single year.
Yeah, and kudos to you. You wrote, took them through underwriting, and you added a special rider which enables that future man, because he's a child right now,
Mm-hmm.
to purchase more life insurance on himself in 3-year increments, and that was a very good call. Adding those to all the juvenile policies that we write now. So
Yeah,
it's
right. There you go. I
it's
didn't even
very
think.
cheap, and yeah,
Yeah, I forgot about that. So now you can
yeah.
add what, maybe like another hundred and fifty
I think
thousand dollars every
150
couple
every
years.
yeah, starting when he's 24, I
Yeah,
think,
for
or
like
something
20
like that.
years he can do that.
Yep.
And then if he gets married or has a kid, he has the option to add another 150,000.
And
So
folks, the reason the reason that's significant is it's not impossible to get underwritten for life insurance as a insulin dependent diabetic, but if there's a lot of different factors: height, weight, A1C, all the blood sugar and all that stuff. But even if it's approved, it's going to be what's going to be highly rated, meaning you're going
which
to
means
be
expensive.
expensive. So,
Yeah.
every dollar of premium you're paying in is buying less death benefit and producing less cash value than it would for, say, me at preferred rates or standard rates or whatever.
Right.
Does that make sense? So that's why it's important. We have no idea what's going to happen with our own health, number one. But number two, our children are young, healthy. They'll never be healthier than they are when they're as children. And it takes very little premium to create a tremendous amount of wealth for them. It's a great jumpstart, and it's the best savings account. It's no tax,
Hmm.
right? It's phenomenal. You're setting them up and your future grandchildren up for success.
And does the insurance company, are they, now that he is diabetic, are they going to cancel the policy and
Nope.
say, nope, we can't give you any more insurance. We got to cancel this one? No, of course not. It's a contract. It cannot be changed by the insurance company,
Right.
at least with whole life insurance. You know, there's other types out there like IUL that there's changes the company can make without your consent. But
Right.
yeah, that's another topic. Maybe we'll hit that one again.
Yeah. It's a great product. I got in an argument on YouTube with a guy, nice younger dude, and I'm just like, I go, well, I want to leave a legacy. I was playing like he has no idea who I am. I was like,
Yeah.
I want to leave a legacy to my family. At the end of life, I want to leave millions of dollars of tax-free death benefit to my family. Can I do that with Universal Life? He's like, well, no, that's not the point. The point is, I'm like, well, what's the point of it?
Why is it called life insurance? What? It's supposed to insure a life.
They
Would you
use
buy
it as
insurance
like
on a car, on an automobile, if, hey, 5 years from now when I crash that automobile, am I going to get money back? No, that's not the point. Well, what am I buying it for?
Yeah, it's just a different mindset. And I'll always, go back to what Nelson said about the product. He said he never sold one of those policies. That's all you need to know.
Yeah.
That's all you need
Yeah.
to know.
And if you think whole life insurance is too good to be true, then I'll just say, if you want some more risk so that you can, you can convince yourself that it's not too good to be true, I'll just go get an IUL.
Yeah.
If you want more risk.
Pay premium for a long time, reduce the death benefit over time because it becomes unaffordable. And then, I don't get it.
Yeah.
They're using it for some sort of strategy that I just don't care to understand, and maybe that's my fault, but it just seems unnecessarily silly and risky.
And complicated. So we like to keep it simple.
Complex. Yeah, keep it
Very
simple.
simple. So, all right. Well, cool. Hey, good talk. Good to see you, Paul. And can't wait to see you next week, man. Be in South Dakota shooting some birds.
Yep. Anthony got me, where the heck is it? He got me something when he was up on vacation with his grandparents. I don't know where he put it. I told him to put it in the office, but he got me like a custom cutout wooden pheasant that a local painter did for him.
Oh, really?
And,
Oh, that's cool.
Yeah, and I was like, well, that's a great gift, son. So it's
Yeah.
pretty cool.
And he'll be there, right? Can
He'll
he
be
shoot
there.
this
He's got
year?
a new 20 gauge. Yep, 20 gauge Stevens over under.
All right.
Yep. it's a nice little gun. It's not a a Beretta Silver Pigeon, but it also isn't $4,000.
Yeah. Exactly.
Yeah, it's good enough. In fact, Chad's son used the same shotgun last year.
Okay, cool.
And I was at Cabela's and I was like, how does this one feel? It's light as a feather, so he's gonna feel it. But
all right, man. Well, we got more competition then. We got more shooters. Should be fun.
He ain't gonna hit anything.
Yeah, I know. Neither are my kids. Jack probably will, but not the other two.
Right.
Yeah. Well, all right, man. I'll see you in less than a week, and we'll talk to everybody else next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.